Next, we have cash equivalents. Earlier, we had a definition of cash equivalent. We will divide that definition now into three parts. Number one, cash equivalent is short term. Number two, it is a highly liquid investment. And number three, it is subject to an insignificant risk of changes in value. So these three make up the definition of cash equivalent. Let's start with short term. When we say short term, the keyword here is term, which means that only debt instruments qualify as cash equivalents. So cash equivalents are debt instruments or instruments with maturity or interest-bearing instruments. In other words, equity instruments in general, they do not qualify as cash equivalents. So shares, investment in shares are not cash equivalents. Next, when we say debt instruments, according to PAS 7 Statement of Cash Flows, anong pwedeng maging cash equivalent since ang pinag-uusapan natin dito ay instruments with term or maturity. Paragraph 46 of PAS 7 states that in view of a variety of cash management practices and banking arrangements around the world, again, number one, that's cash management practices. Number two, banking arrangements around the world, an entity discloses the policy in which it adopts determining the composition of cash and cash equivalents. Ano sinasabi? Determining which item or instrument is part of cash and cash equivalent is a matter of policy. Policy yun ng entity na kailangan nilang i-disclose sa financial statements, that's under PAS 7. So ang tanong ngayon, ano yung term or maturity to qualify as cash equivalent? As a rule of thumb, wala namang sinasabi na required term or maturity, but under PAS 7 as an example, if the original maturity of a debt instrument is 3 months or less, then the debt instrument is cash equivalent. Short term, so 3 months or less, cash equivalent. Example, if they qualify, time deposit, fixed deposit, money market funds, BSP, treasury bills, and certificate of deposit. These instruments, if their maturity is 3 months or less, original maturity that is, then they are cash equivalents. Question is, what if the original maturity of the instrument is more than 3 months? It could be 6 months, could be 1 year, or could be long term, say 2 years. When does the instrument, the debt instrument, become a cash equivalent? The answer is, if it is acquired within 3 months from maturity. Keyword, acquired, and another keyword is maturity. So, if yung instrument natin ay ang original maturity niya ay hindi na 3 months or less, lumalampas na, meron pa rin bang chance maging cash equivalent yung debt instrument? Ang sagot, meron. As long as bantayan natin, hanapin mo yung acquisition date niya. If the acquisition date is within 3 months or less from maturity, then the instrument qualifies as cash equivalent. Kailan hinahanap tong acquired within 3 months from maturity? If the instrument's original maturity is more than 3 months. Again, original 3 months, and if it's more than 3 months, then acquisition date is a key factor to determining whether the instrument is a cash equivalent. Let's have an example. Sample, meron tayo dito date of the instrument, acquisition date of the instrument, and maturity date of the instrument. Say our year end is December 31, 2020. So number 1, the date of the instrument is October 1, 2020. It matures on January 1, 2021. So original maturity is counting from October 1 to January 1, 2021. That's 3 months. October, November, December. Since original maturity is 3 months, even if it's acquired on October 1 or December 1, since original maturity falls within the requirement, which is 3 months, then the instrument is a cash equivalent. Comparing these dates, 3 months cash equivalent. Next, date of the instrument, October 1, 2020. Maturity, April 1, 2021. So original maturity, counting from October 1, 2020 to April 1, 2021 is 6 months. That's October, November, December 2020, January, Feb, March 2021. Lumampas ng 3 months. Anong magiging rule? Bantayan yung acquisition date. So in here, it's acquired on October 1, 2020. Comparing these dates, October, November, December, January, Feb, March, acquired 6 months from maturity, it can no longer qualify as cash equivalent. So una, i-compare mo tong dates na to at hindi nga siya pumasok sa 3-month rule natin, hindi na siya cash equivalent. Ang next question is, kung hindi siya cash equivalent, anong pupuntahan niyang classification? The answer is investment. So how do we know if it's a short-term investment or long-term investment? First, you compare the maturity date and the year-end, the reporting date. So since it's no longer cash equivalent, it is an investment. Is it short or long? Compare year-end, December, and maturity date. From December 31, 2020 to maturity date April 1, 2021, that's only 3 months, January, Feb, March. In short, the instrument is a short-term investment. Kasi 3 months na lang to mature na siya. Next, date of the instrument, July 1, 2019. Maturity date, July 1, 2021. So original maturity is 2 years, a long-term instrument. So dahil lumalampas ng 3 months yung original maturity, ang titingnan natin, acquisition date. It was acquired on July 1, 2019, which is 2 years from maturity. So clearly, dahil sa dates na to, hindi 3 months before maturity, then hindi ito cash equivalent. Ang next na lang natin na bibilangin or titingnan, investment siya dahil hindi siya cash equivalent, pero is it short or long-term investment? Now, which dates do we compare to determine whether it's short or long? The answer is the end of the reporting period and maturity. So, year-end is December 31, 2020. Maturity is July 1, 2021. That's 6 months from year-end. January to June 30 or July 1. In short, the investment is a short-term investment. Next, date of the instrument, January 1, 2019. Maturity, January 1, 2021. 2 years. Original maturity, long-term. So lumampas siya ng 3 months. Meaning key factor ang acquisition date, which in this case is October 1, 2020. Now let's compare these dates. From October 1, 2020 to January 1, 2021, October, November, December. That's 3 months. Dahil pumasok siya sa 3-month rule or acquired within 3 months from maturity, then this one is cash equivalent. Okay? So to summarize, anong gagawin pag may mga ganitong binigay, may mga dates? Titingnan mo muna yung original maturity date or original date. Pag lumampas ng 3 months, tsaka mo i-assess kung kailan siya binili. Kung binili within 3 months from maturity, that's the time it's a cash equivalent. Pag lumampas doon, ang titingnan mo naman ay maturity date and year-end. If it's 1 year or less from year-end, ang maturity, then it's short-term investment. If it's more than 1 year, or at least 1 year, it's long-term investment. Okay? So these dates are being compared to identify whether the item is a cash equivalent or not. And these dates are being compared to identify whether the investment is short-term or long-term investment. So, for our first definition, balikan natin, dun tayo sa equity instruments. Investment in shares or investments in shares, they do not qualify in general as cash equivalent. So, ordinary shares, they are not cash equivalents. Preference shares, they are shares they are also not cash equivalents. However, when the preference shares are mandatorily redeemable, from the word redeemable, which means that the preference shares now have redemption date or redemption period. Period means term. Ibig sabihin, since meron ng term, the redemption period, ang preference share natin, then it qualifies as a cash equivalent. Why? Because its term makes it a debt instrument. So in form, the preference share is an equity instrument. But if it's mandatorily redeemable in substance, it's a debt instrument because it now has a term or maturity. In that case, the mandatorily redeemable preference share is now cash equivalent if it qualifies under the 3-month rule as a rule. So since debt instrument na siya, any dividend we received from our interest or investment in preference share is now presented as interest income. So yung natanggap natin na dividends galing sa issuer ng preference shares, kahit dividend yun in form, ang presentation natin nun in the income statement is interest income because the mandatorily redeemable preference share is now a debt instrument. Next, second part of the definition, highly liquid investment. It means that the instrument or the cash equivalent is readily convertible to keyword known amount of cash. So more or less, we can compute or we can arrive at the amount of cash if the cash equivalent matures. Highly liquid, readily convertible to known amount of cash. Number 3, subject to an insignificant risk of changes in value. Kung magbago man ang kaniyang fair value or present value, kasi interest-bearing yung instrument, so the effective interest rates may change in the market, the change is insignificant. When we say insignificant, hindi malaki yung pagbabago. Compare natin. Kung meron tayong investment in shares and long-term bonds, pwedeng magbago ang values nun. For the shares, because of the change in quoted prices, the fair value may change. For the long-term bonds, because of the interest, the effective interest, the present value may change. But for a 3-month, this one, 3-month time deposit, the interest may change. Its value may also change. But that change, since it's only 3 months, meaning short term, is insignificant. So dahil sa changes ng shares and long-term bonds as to fair value and present value, we recognize unrealized gains and losses for investments in these two. But for the 3-month time deposit, because the change is insignificant owing to the nature of the investment and the term, very short, then we do not recognize unrealized gains or losses. So, itong 3-month time deposit, insignificant change in fair value, no unrealized gain or loss, it is presented as cash equivalent, while shares and long-term bonds investments, they are presented as investments. So, ito, cash equivalent, but merong malaking but. Ano yung issue natin kanina sa PAS 7 Statement of Cash Flows in our discussion in cash? Para maging cash equivalent dapat for short-term cash commitments. Meaning, pambayad ng dues, salaries, and taxes. So, laging nandyan yung purpose para maging cash equivalent, short-term cash commitment. Bakit? Kasi kahit pa 3-month time deposit ka, pero your purpose is for trading or speculation, mahuhulog ka pa rin sa investment purpose. In that case, a 3-month time deposit held for trading or speculation is presented as investment, not as cash equivalent. Kasi hindi siya for payment of due salaries or taxes, or hindi siya short-term cash commitments. So, for exercises, answer questions 24 to 31. And these are the answers. Also these. So for number 32, let's answer. As of December 31, 2019, that's our year end, Monica Company has listed its investments with the following details. BSP Treasury Bonds. Date of acquisition of the bonds, July 1, 2019. Date of maturity, January 31, 2020. Kung bibilangin natin, comparing these dates, acquisition and maturity, July, August, September, October, November, December, January, the bonds were acquired 7 months from maturity. In short, hindi na sila pwedeng maging cash equivalent. Ang pwede na lang nilang puntahan, investment. How do we know if it's short or long-term investment? Compare year-end, December 31, 2019, and maturity date, January 31, 2020. Isang buwan na lang. So this is a short-term investment. Next, BSP Treasury Bonds A. Date of acquisition, November 1, 2019. Date of maturity, January 31, 2021. Long term, 19, 20, 21. So lampas ng years. And hindi na ito cash equivalent. Ano na lang ang gagawin natin? Compare year-end 2019 to maturity date. From 2019 December to January 31, 2021, that's 1 year and 1 month. In short, long-term investment kasi lumampas ng 1 year from year-end. Time deposit. Binili December 1, 2019. Maturity, March 1, 2020. Kung bibilangin natin, December, January, February. So 3 months from maturity. This means the time deposit here is a cash equivalent. Ordinary shares of ABC Company. Equity instruments, ordinary shares. So hindi ito pwedeng cash equivalents, investments ito. Ang tanong na lang, short or long term. Nasa baba, Monica acquired the ordinary shares of ABC for the purpose of trading them in the near future. Near future, the intended sale or trade of the shares, short-term investment. So our solution for A, that's a short-term investment. For BSBB, that's a long-term investment. Time deposit, our only cash equivalent. Then ordinary shares, another short-term investment. So our cash equivalent to answer question number 32 is 50,000, that's letter A. Question 33, total short-term investments, 250,000, letter boy. Next, question 34. Celine Company presents the following for the year ended December 31, 2019. Ang tanong, total cash equivalents. Take note, ang tanong lang, cash equivalents. Hindi niya sinama sa tanong ang total cash. Just cash equivalents. 60-day money market placement, 2 months. Pasok sa 3-month rule, cash equivalent. Money market, take note, savings account. Savings account ito meaning demand deposit, withdrawable on demand. This is presented as cash and not cash equivalent. The same is true for the next one, mutual fund account but with checking privileges, may be available on demand. We can withdraw out of the fund, this is cash. 120-day certificate of deposit, 120 days, meaning 4 months, lampas ng 3 months. Hindi naman binanggit na acquired 3 months before maturity, so this is a short-term investment. Next, the last one, investment in 1-year treasury bonds. It says here, the investment was acquired 3 months before maturity. So seemingly, kung hanggang dun lang, this is a cash equivalent. However, in the second line, it says the instrument was acquired and held to speculate on changes in market interest rates. For speculation, for investment reason, not for short-term cash commitments. So although this investment was acquired 3 months before maturity, but it was acquired for an investment purpose, this is a short-term investment. It must be to be cash equivalent, acquired for short-term cash commitments. for payments of dues, salaries, and taxes, and other short-term payables. So in this case, our 30,000 is a cash equivalent. Our money market savings account, that's cash. Our mutual fund with checking privileges, that's also cash. Our 120-day certificate of deposit, that's a short-term investment. And our held for speculation bond, that's also short-term investment. So first question is cash equivalent. That's number 34. We only have 30,000, letter A. Second question, take note na ang tanong lang cash equivalent. So ito lang na column. Second question, short-term investment, total of 75,000, letter C. Third question, ang tanong sa number 36 in your handout, total cash and cash equivalents. So we will be combining these two columns. For cash, we have 45,000 and cash equivalents. So aggregating these two, we have 75,000. Cash and cash equivalents, number 36, letter C. 37. Ang tanong sa 37, magkano ang amount to be presented as cash equivalent? Evermore has cash on a 3-year fixed deposit with a commercial bank. Fixed deposit, 3-year original maturity. At December 31, 2020, the deposit is 2 months away from its maturity. On maturity, the entity expects to use the proceeds to settle with its trade creditors. Kahit hanggang dyan lang yung basahin natin, we can answer the question. Una-una, sinasabi ng tanong or ng case na 2 months na lang, so short term, to mature na yung fixed deposit. Also, pambayad din siya. Once the deposit matures, pambayad siya ng short-term obligations. Parang sinasabi niya na cash equivalent ito. However, there's a very important requirement for this instrument. Its original maturity is 3 years. Para maging cash equivalent, dapat binili, acquired 3 months before maturity. Nothing in this problem says that. Walang sinasabi na binili 3 months before maturity. So we cannot assume that that is the case. Ang ibig lang sabihin nitong 37, matagal na tong binili. Almost 3 years ago. And 2 months na lang to mature na yung instrument. Pero hindi niya sinasabi na binili siya 3 months from maturity. Sabi niya, matagal na tong binili. So, we do not assume that for instruments with original maturity of more than 3 months, we do not assume that they are acquired 3 months before maturity. Dapat sabihin ng problem, especially for this one na long-term siya originally. Kaya, kahit pa ito ay 2 months from maturity and pambayad, this cannot be cash equivalent. This is a short-term investment. Short-term investment because it matures in 2 months. So, to answer number 37, cash equivalent, wala. That's 0 because it's a short-term investment. So, answer questions 38 to 40. This is the solution. And our next video, we would be discussing about petty cash fund.